Good morning, traders. It is Wednesday, December the 12th. Taking a look at the morning charts, we've got the US dollar index, and you can see here over the past few days it's been pulling back. Now, we did have a nice impulse wave to the upside. It came up, broke this previous pivot high over here, and the fact that it pierced that now puts it into a neutral to bullish territory, that it's made a higher high, and it's had a nice pullback. This morning we're seeing it continue to drop down with a little bit of momentum. It broke below this little bit of a bear flag here, which happened to be down at a support. It looked like it was trying to put in a bit of a bottom yesterday. In overnight trading, it's popped down this morning, and now it's down at the next support level, which are these previous pivot highs, this little mini kind of bottoming pattern, base or mini head and shoulders, depending whatever you want to call it. So we are down at another support level this morning, and wouldn't be surprised if we see the US dollar try and firm up and have some type of bounce going forward. There is potential for the US dollar to actually continue to head up here, and we do have an FOMC meeting this afternoon at 12 o'clock, and we'll see how things unfold. But overall, it looks as though the US dollar is starting to get a little oversold, and now it's dropped down to the next support level. If we find a little bit of stabilization today, then we might actually see the dollar start to pull back up, and it could be forming a rounding bottom here and a inverse head and shoulders for it to go higher. Now, if we do see that, we're going to see stocks pull back, and more or less this drop this morning in the US dollar index is helping lift stocks and commodities. And I mentioned this yesterday after the close, that a lot of times we will see during these key market overbought, oversold conditions, you see price gaps in the morning, either a sharp gap up, sharp gap down, and it's really the bulls and bears kind of struggling. And whatever happens in the US markets, if you have a big up day, sometimes it echoes overseas, so it kind of follows suit, so it kind of runs the price up overnight. And that's more or less what we're seeing in the equities market. So the question is, are we going to see prices get stepped on after a new high is pushed today, triggering more short covering, getting more people to chase, and we see a big reversal to the downside? Now, I'll cover the reversal candle at the end of the video here, explaining kind of what we got into yesterday. Taking a look at commodities, here's the crude oil chart. You can see it's been working its way, building a mini base, broke down, it's working on another base here, has yet to really break through. Both these bases here came up, they were tested many times, never had a clear solid breakthrough. Back here we had never had a solid close above and breakthrough to the upside. Each time it worked its way higher and higher and tried and push higher, but eventually it couldn't hold, and we've gone back down. It looks as though it's trying to form another little bottoming pattern down here, as we're kind of down at a support zone and the support trend line. Overall, crude oil struggles to hold up, and just looking at the high volume spikes, majority are still red, meaning there's still distribution going on, there's still unloading of a lot of oil contracts, and we haven't seen any great big buying spikes and people starting to accumulate. Overall, it's the lack of buyers, and there's still strong sellers out there. Looking at natural gas continued to sell off yesterday. It's starting to get a little bit of a three-wave correction here, and we're coming down to this previous pivot support where it's trying to find some support, and we'll see if it can grab some stability. Overall, I kind of want to see it build a little bit of a base going forward. I'm hoping it'll slide down lower, but overall we want to see price kind of bleed off, and we want to see it build some type of kind of basing pattern with multi-peaks, and a break of that level eventually would trigger another move higher. Now, as it consolidates sideways, we would actually have the trend lines slowly moving up closer to come and support that level, and more or less you'd narrow the gap between the trend line and the price of natural gas, which lowers the overall risk because the trend line or the moving averages will act as key support. So that's kind of where we stand right now. You could argue there's a 1, 2, 3, 4, 5 wave correction, or you could just say that there is a more or less a 3 wave, and either way, it's still looking like it's fighting here. It's trying to struggle. It looks as though on a short-term basis it's ready to pop. Might see it come back up to the 13.55 area here, and it might chop around here for a while and build that base that I'm talking about. So we'll keep our eye on it, but overall I don't want to jump into natural gas right here, because if we just zoom out a bit, you can see there's quite a big distance for prices to fall, and you don't want to try and pick a bottom when there's that much of a drop between where key support is and where the current price is, and the fact that we've got this key support level right across here. If that level is broken in one day, we can pretty much see natural gas drop almost that whole distance. So you don't want to be trying to get involved picking a bottom when natural gas moves as fast as it does and there's potential for a very sharp drop. Looking at precious metals, here's the gold chart. This is the 4-hour chart of gold. We started to put in a little bit of a short-term bottoming pattern with long lower wicks. Every time it dipped down, buyers came back in and bought it back up. So we have had a little bit of a basing pattern form. If you just look across here, more or less we've got this mini little inverse head and shoulders. It's kind of moved above it, and it's kind of trading up there on really light volume. Really, there hasn't been any volume, no real follow through yet. There were some buyers here, but overall the breakout and this consolidation here, we're just not really seeing any buying, and the two spikes of volume happen to be selling volume. So the sellers are still lingering, kind of letting the price drift up, and then it could eventually go for another sharp tumble, very similar to what we saw back here. You've got lots of selling, and then eventually you kind of get up and you see it drift up here a little bit. They let it run up, and then it gets stepped on again. Now overall, if we zoom out on gold, you can see the big range that we're trading in, which is this red line and this green dotted line. We're right smack dab in the middle of the range, and currently the short-term trend is down. We've got a move down, a bear flag, a move down. This could be easily seen as another bear flag or just a continuation here that we could end up coming back down to test this main breakout here, or this first pullback off the breakout down at that level somewhere over here around the 1650 area. So there is very much potential for gold and silver to continue to pull back here. Really, until it breaks through this 1800, that's when the real momentum is going to take off. Trading in the middle of this range, you just see it kind of meanders around. Very tough to trade, very short-term stuff. We really want to get involved in gold when the real momentum picks up and we see the next major wave to the upside. Now, if it does form a nice basing pattern eventually over time here, we'll maybe looking to get long somewhere around the 1750. When it comes up to maybe touch the middle of this basing pattern, if it's trying to put in a little bit of a double bottom here. But overall, we still have, I think, quite a bit of time for price to mature and stabilize at this level before we want to get in at the middle of this range. Looking at silver, here is the silver chart. Pretty much the same scenario as gold. It more or less formed this little basing pattern. It kind of popped above it and then it dropped back down. It's forming a little bit of a bear flag. Again, overall the short-term trend here is down, and the volume down for this breakout pattern is showing this some distribution selling, not huge selling, but overall you can just clearly see that there's sellers in control. The big volume spikes on this once prices broke out, it got stepped on with high selling volume, and then again started to break down on high selling volume. It's drifting back up to those highs. This will act as resistance, and eventually this likely will continue to play down at least to this lower level, probably 32.75 area, where these buyers that stepped in down here with all these lower wicks might step back in and push it back up to around the 33 area. But overall, silver and gold are trading sideways in the middle of a big range, and you're really kind of just throwing the dart at the board at this point. Looking at gold miners, continue to work their way through this kind of bottoming pattern. It's trying to put in a bottom. It's picking up speed. We did have a downtrend line here, and then we've picked up speed to a steeper downtrend line, and we've been hitting that for the last couple days. Overall, if the market does roll over here, we're going to see gold miners push to a new low. Believe it or not, this pattern is actually very bullish. You see this, you see speed to the downside start to pick up with these bounces, and the bounces kind of drag out, and you get these new lows each time. And so if we can actually get another run down to a new low, it's going to put us to the bottom end of this channel, this support trend line, and it's going to bring us back to a support zone way back here, where we're going to have majority of shares traded. We've got major pivot points, a breakout pivot, pivot low, a breakdown, pivot high, breakout, pivot high. If If we could get it down to this 44 level, I think that would be a great opportunity to get into gold miners. This pattern is looking like it's going to get there, but we do need the broad market to have its pullback and we need the dollar to bounce. But overall, you look across the market, most sectors are up. They've been up several days in a row. A lot of things are hitting their upper Bollinger Bands, which means usually you see prices pull back, and everything's kind of setting up for everything to take a pause or a breather. And if everything does, then we're going to see the broad market like the S&P 500 pull back, along with gold miners. We're going to see everything pull back and take a breather, which will for gold miners pull it down to a new low likely and give us a good opportunity to get long. Looking at the bond chart, bonds continue to go in that range. We had this little bear flag forming that I pointed out on Monday. Looked like it was trading in the middle of the range. Pointed out that it's likely to just go back down to the bottom of this range here as the equities market squeezes kind of higher and tries to shake the shorts out. And that's exactly where we went yesterday and this morning. We're now down at the bottom end of this range, kind of just ping-ponging around in here. Wouldn't be surprised if it drops a bit more, pierces. Nothing is precise in the market. You can't pick exact tops and exact bottoms, and I wouldn't be surprised we see it work its way a little bit lower, but overall it's trading in this red kind of range. Again, we do have key support down here at this green trend line at the 149, and it could work its way down there also, but overall I'm not looking to get involved in this bond chart right quite yet. I do like it, I think, going forward when the market actually has a if we can get this pullback in the market, I think there'll be a good opportunity in bonds using an inverse fund, but we'll play it from there. Looking at the SP 500, here is the daily chart, and more or less yesterday we had a nice reversal candle. If we just zoom in, this chart is, let me just remove some of this stuff, stretch the chart up a bit. If you look at the candle here, we had a nice run up. We had a gap up in the morning. It ran up, pushed up through the day, and then late in the day we saw selling step in, and it pushed it down. We had a nice long upper wick, and a lot of times when you get that pattern, that means the selling momentum is starting to creep in, and a lot of times you'll see the price. Sometimes it'll chop around for 2 or 3 more days. And push actually to new highs even for 2 or 3 days in a row, very small minor highs, just kind of running the stops. Anybody who shorted say yesterday will put their stop just above yesterday's high, so the market will naturally want to push it by a few cents or a couple ticks, and then even the next day it might push above that previous candle again, really just driving the shorts nuts and trying to shake them out, and then you'll see the price just completely collapse and drop. So that's kind of where we stand right now. Is we got a reversal candle. If you do any research on them, more or less, generally you see the price move down pretty much the next day or the next 2 or 3 days, and you see price pick up speed for usually it's about a 3 to 8 day kind of cycle going down. So that's kind of where we stand with that. And if we just go to the intraday price action chart here, and we just zoom into, let me just go right back to just yesterday's price action. So we had the opening bell, market ran up, pushed into overbought territory, had kind of a capitulation, kind of the stops, a lot of short covering, huge volume spike, price jumped up, and then we saw some selling step in, kind of pull it right back down again. Right late in the day, we started to see strong selling come in, and really there wasn't any sign that we were going to have a reversal candle until late in the day, which is why everything was kind of rushed, trying to get the alert out. And we saw the nice sell-off into the close, and then it had a little bit of a bounce, and in overnight trading we're seeing the markets move higher, but overall that reversal candle, that whole thing didn't come to light until the last more or less hour, last half an hour of the session. And if we just look at overnight trading this morning, if you look at overnight trading, you can see we had once the markets closed, we had a little bit of a pop, came back up to the high, consolidated in overnight trading. It's squeezing to a new high, just piercing it, this previous high. This morning it's starting to pull back a little bit now, but overall we're going to get a gap up. We do have some breather space. We do have up until the 43 level, which is still quite a base higher, enough wiggle room for the market to squeeze up another couple days and really shake the market up before it has a very sharp pullback, I think, which is due at any time here. Taking a quick look at the market, if we just look at here at the bar chart momentum index, this is a chart I like to look at, and more or less anything above the 101 area is considered to be overbought on a short-term basis. Anything below the 99 is oversold. What happens is if it closes down in the lower end, usually the next day you'll see the momentum stall out, and you'll see any down pressure there was, you'll see it kind of relief and start to bounce up. And when you close up in the upper end, it doesn't matter how far you are up above it, you just have to be pretty much at the 101, which we were pretty much at yesterday. That means the market's overdone on a short-term basis. It's moved too far too fast, and the odds are we'll probably see the prices start to pull back a little bit, if not swing to the opposite end of the spectrum, and we see a sharp pullback. Now also, if we just look at stocks trading over the 20-day moving average, this is a very solid indicator of what's going on. Pretty much anything over the 75 area, you start to look for key intermediate tops where you get a nice sharp pullback in the market. You can see we've pushed up there the last couple of days. This morning we're going to get a gap higher. We'll probably see this indicator jump a little deeper. Every time we get up to this level, we usually see the market have a nice pullback. And when we're in an uptrend, which we are now, it may not pull back all the way to the lower end of the range. It may only pull back to the 60 area or so, but either way, that could be a nice 3 to 8 day pullback that could give us a pretty good short play, and also for us to have an opportunity to get long in the market when it does pull back from there. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.